Fly me to the moon, let me play among the stars, and let me see what spring is like on Jupiter and Mars.
This is the Iron Trader, and this is the weekend edition. Now, today we're going to do something a little bit different. Today's going to be all about trading and trading tips, okay? So how we're going to start this off here is I'm going to do a bunch of charts, especially natural gas and for crude oil, and I'm going to show you how on the 5-minute chart, how nice it worked on Friday, okay, for the trading. The next thing we're going to do, we're going to look at this guy. I posted him before here. His name is Peter Tuchman. Okay, he's big on Wall Street for about 30 years. They call him Einstein. What he does is he has a trading school. It's called Wall Street Global Trading Academy, which you can sign up for that. I don't know what the fee is for that, but if you're a beginner or you really want to learn how to trade, that might be something that you might be interested in. So I'm going to play the video for you so that you can get all the information. And then what we're going to do is we're going to look at some candlestick patterns, and then we're going to look at some chart patterns here to finish it all off. Okay, this video is for information purposes only, not a recommendation to buy, sell any stock, commodity, ETF. Please like and subscribe. Thanks for watching. Okay, here we have natural gas here, your daily chart. Now on Friday, very, very interesting because it broke through. Okay, so here's how I traded this today. Okay, so what we want to do is what you want to look at for is if you watch my video, I pointed out that we needed to hold this key level. This was that 1.90. Okay, now the 8 days moving up here, 1.91. That's very, very nice. Okay, so we had this very, very key level that we were holding. So the previous day's high was 1.91. Okay, and then what we did is we had a higher low here of 1.927. Now, when we look to the left, I always say look to the left of the chart because where it's been is usually where it's going. So what we do is we look at this candle here. That was 2.056. That was the top of the candle, okay? Then what we did on that Thursday is we went to 2.05. So I pointed out that this could be a possible double top situation because we had 2.056 and we had 2.05, a lower high, and this could come down. Well, the next day, what it did, and this got as low as 2.01. Okay, so you're holding that top portion of the candle. Then she started to run up very, very high. Now, again, once you start breaking above not only the 2.05, that's not what you're looking for. You're looking at 2.056. Once you break above that, that tells you you got to get long to go to the next level right here, which was 2.09. So when you look at that price channel, 2.09. That tells me that I have to stay long. And I wait and see, once I break above that 2.056, I wait and see what happens when you hit that 2.092. Does it reject it and come down, or does it bust through? This candle Friday was so strong that it busted right through. And then if we look at the weekly chart, okay, the 21 simple moving average is sitting at 210. It went right above that. That tells me I got to keep on, my trade is long. But once we broke above that 2.56, then I added to my position because what we did is we made a lower high. Okay, that was very key. The previous day, see how we had a low, then we made a higher low, very, very nice. And then when this candle came down here, we were holding, okay, all the key levels here that we were looking for. Okay, so this here was the 2.0 level. Okay, it got down to 2.01. So now we're holding that support. Then once I was above that, that's your buying opportunity. Then once we get above that, you add to the position and see what happens when you get to 2.09. Is it going to reject it or is it going to crack up? Well, it cracked right on up very, very nicely. I'm going to show you on a 5-minute chart here another way of doing that with a series of higher lows. Okay, now what we do is we look at where is this going to stop? Okay, so you look at it got as high as 2.16. Very, very nice. So you just come to the left of the chart. Okay, what do we have here? You have 2.158. And then we have 2.168. So this was your resistance levels. That's why the trade stopped. Okay, so what I did is I took off that extra amount of shares that I bought once it closed above this 2.56. Once it got above that, those extra shares I bought, which was 2,500 shares of UNG, I took those off and sold them at the end of the close. Now I'm still holding long here on the UNG here because we have a nice green candle and we have a breakout. Now, what we're looking for here now on Monday is this. What we want to do on the upside is look at that 2.168 because that is your gap. Okay, I was telling you about the gap all the way down here. All you gotta do is go back to the videos and it's right there. That is your gap. Now, if we can get above that, then what we'll do is we'll come right to the bottom of this candle at 2.235. We'll come here at 2.27, and then we have 2.29. That is going to be your next resistance. And then we have, okay, you look at the low here, you have 2.38, and then we'll come over here to the top of this candle right there, okay, at 2.42. Now, we also have some resistance here. Once we get above that, okay, we look to the bottom of these 2.31, and then you have that 2.32. Okay, then we follow this here, but this is going to be key because this is the gap fill. Okay, so we look at the highest candle here, which is 2.168, which we pretty much went right into it at 2.16, and then that's what we're looking for that. Now, again, once you fill this gap at 2.42, now a lot of times it might just come into the center of the gap and go right here to the 2.31 or 2.32, and it might just end there and come right on down. But eventually you're going to fill this gap at 2.42, and then you have your target up here at 2.47. But the reason I stayed with the trade was very, very simple. Because when we look at that 2.56 and 2.5, that was a possible double top situation. Well, once you start breaking through that, that negates that double top situation. Then you add to the trade and you look to the next level, which was this 2.09. That's what we're looking for. And then you can see where it's creeping right up to there, went through that 210 level, and then she just kept on rising up. Then you wait to the end of the day, and then you take your trade off. Now, if this were to reverse and came all the way down, well, and never made it above that 2.56, well, then I would never add it to position, and I would have sold my UNG position right there, okay? See? So that's how you have to trade. Now, when you look at these charts, okay, you say, well, this was a contract roll here, and it did this. A contract, that doesn't mean anything, okay? Look at this right here, the bottom here. This was also the contract roll. And then look what happened, okay? This was a contract roll where it popped up, and it came all the way up, and then filled that gap until all the way there. Now, we had that another June, going into the June contract roll, and you could see once you're holding that level there at 1.09, all this here from the past here, is all negated. It doesn't matter what it did in the past. Only thing you look for in the past is your support and resistance levels on your candles, okay? It's just that simple. So what you do is, now what we want to do on Monday is we want to see if it can hold this key 2.092. Very, very critical. If it can, then you can make that as another buying opportunity here, and then we'll look. Okay, say it comes down and it holds at 2.9. Then you can look at that as a buying opportunity here. And then on the upside, what do? We look for that 2.16, and then you look for that 2.168 level. Okay, that is your key breakout because that is the gap. Then we can go to that fill. Okay, so if this 2.09 holds, okay, say it sells down and that holds, that's a buying opportunity to go higher. Now, say it loses that. Well, then we just keep on following this level, and then we want to look right back at this 2.56 level again. Now, if it can't hold that, then we'll come down and watch that 8 simple moving average at 1.91. You'll look at that 50-day, that 21-day here first at 1.83, and then you have your 50-day at 1.79. If any of those hold, then that's another buying opportunity to take a long and go higher, okay? So if we lose this 2.09 level, and you can see, hey, this is starting to be a red candle going on here, then you take a short, and then you can work it all the way on down here until you get your key level here is your 8 simple moving average, okay? Because that is going to be your first target on the downside. But again, if it holds, then you want to watch that 2.16 on the upside, because then you're going to go with 2.168, then we're going to go here, 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 and then possibly 2.31, 2.32, and then you're going to go right 2.42. That is how you trade the market. That's how I traded on Friday, okay? So whatever done in the natural gas did in the past, okay, well, the gap filled and it came down. It doesn't mean anything. Same way with here. The gap came down and it went down low. That doesn't mean anything, okay? All that means is what is going on now. So when it gapped up, and as long as you held that 1.9 level going across from the bottom of that candle, 1.90, That's all that matters in this trade here, okay? So always remember that. Now, we're going to take a look here on a 5-minute chart. Okay, here we have the 5-minute chart. Now, when we look at this first level right here, okay, the time of day that that was 7 a.m. We put a low in there of 2.015, okay? It rallied up here, and then we put a low in here, okay? Now, this was 8:45 a.m. We put a low in there of 2.02, a higher low, okay? Then we came here, okay? And when we put a low in there of 2.035, that was at 10 o'clock in the morning, okay? Look at this stock pattern here. You have a low, we have a higher low, and we have a higher low, okay? And then when we look to the top of this candle right here, what do you see? There's that 2.056, okay? That right there is what that breakout was. So then the next candle, look at there, it zoomed right up. That's your buying opportunity. And then look what happened here, okay? All the way on up here, all the way up here, and then we start going sideways here at the end of the day. Okay, so what you want to do is watch this 5-minute chart. It just, it's clear as glass. It's all right here. When you see a low, and then you see a higher low, and then you see a higher low, you got to get your ass in the trade. Okay, and then you watch the top of that candle. That's 2.056. You see this? 2.0. That's what we're looking for on the daily chart when I said look to the left of the chart, because we had a retest of 2.05, which was a possible double top. So once you broke again above that candle, then I added to the position, and then look how nice this was, okay? So I don't want to hear anything more about 11 o'clock, something happened, this and that. Look at the chart. It's right here, right in front of you, just as clear as glass, okay? There's nothing else here that matters but this chart. But when you see that series of higher lows, get in, okay? Then we just had a nice bouncing around situation here, and then we close off very, very high. So then we look at the bottom of this candle, you had 2.12, okay? Then we looked over here, you had a little bit 2.12. So we had a nice double bottom action, went right on up here. See this W pattern? Very, very nice. And then it just rallied up here, very nice sideways. So now we got to see what is going to happen. Is it going to break above that 2.16? Is it going to come down and hold this kind of a level here? Or what it's going to do on Monday? But just punch up a 5-minute chart. If you're going to scalp trade, use a tick chart, a 1 minute, a 5 minute. It's all right here, very clear for you. This thing's right there. See that? Very easy. That tells you got to get into the trade situation, okay? But again, now if you're going to say I'm going to broaden this out here, and then I want to take a little bit more time, then use a 15-minute or a 30-minute chart, okay? If you want to say I'll take more time, use an hourly and a 4-hour chart, okay? But this is how you trade that. You always look for patterns: low, higher low, and then rally all the way on up here and stay very, very nice all the way on up. Okay, let's look at an hourly and a 4-hour chart. Okay, here we have your nice hourly chart. Now you can see this, how nice, where this is almost like a bull flag. It gapped right up here. That was that contract roll. But you're holding this key level here. See when you come all the way across? See how nice you're holding that? That's that 1.9 level. See how nice that was? Then when you start breaking up, you can use this for trading here also if you want to spread the trade out a little bit. I like the little faster trade. That's why I use a tick chart, a 1 and a 5-minute chart. But this works out very, very nicely here. See, going all the way and up. And then you finish right at the top of the level, okay? The candle finished right on top, okay? At 2.15, got as high as 2.16. So now Monday you have to see if you can break through that or what is going to happen. So, okay, is it going to come right on down? But see how you can hold this? See, when you hold that level, once you gap up, gaps are still good. Eventually you'll fill, but it doesn't have to fill today. But once you gap up here, okay, that's what you're looking for, okay? You want a gap, and then once you start breaking out here, then she just shot right up here nicely. That's the kind of pattern that you want to look at for. So it holds that support. It doesn't fall off the map there. That's the very, very key. Now what I'm going to show you is a seasonality chart on natural gas. Okay, here we have a seasonality chart. Okay, so you always want to watch these here. Gives you kind of like a bigger picture. Okay, so now we're into the May. Okay, so we popped up here. This is the May situation. Okay, so you always want to watch this. where you can rally right on up here, okay? Now, this chart is over a 20-year period. All you have to do is go to equityclock.com. You can punch it up for any commodity that you're trading. If you're looking at gold, silver, if you're looking at crude oil, you look platinum, palladium, whatever you want to do, they have everything right there for seasonality charts and how they trade. So always take a look at that. So now we're into May here. We just started here. But look how this chart here rises pretty much into the middle of June. Okay, and then what you want to do is you want to get out of your trade if you're saying if you're really long. Okay, and then what you do is it'll come all the way on down here until you get to the 1st of September, because this here is now you're starting with hurricane season, disruption, just like what you had down in Texas with all the floods. Okay, that's what you're looking at, and then we're going into the winter. So then what you do is you want to buy this and say, hey, I don't want to trade oil and natural gas. I just want to take it long. Then you just buy it down here in September and just let it float all the way up here into your December time frame. Okay, then you got to figure the trade is done, because now you're going into January futures, March, April futures kind of a situation. The trade is done. Okay, so always just take a quick look at this here. So this is where we are right now, and this should have a nice run up here. So possibly we could hit that 200-day simple moving average on your daily chart, or maybe even that 50-day on your weekly chart here. We got to see how this is all going to shake out here. But see how nice this is, okay, when you can round it all the way up here. Then you dump it, okay, or you can go short, kind of a situation if you're a short seller too. And then you just wait and then wait till you get here until you get that hurricane season going on. That's also always massive disruption. And then we go into the heating season, and then there we go, okay? All right, let's take a look here now on natural gas on a weekly and a monthly chart. Okay, here we have the weekly chart, okay? So this is what we're looking at here. Now we had that key 209, okay? And then right here is that 210 level, okay? So now you can see Friday how you went and you closed above that 210 level, okay? You closed at 215, okay? Everything is right up here for you, okay? So you look at that 215 level, that exactly is very, very bullish. Now, if it comes down and you come right back down to that 2010 level and you hold it, that tells you that's another buying opportunity, because where do you want to go is right here. Here's that 2.16 level, okay, 8, okay? That's what's going to be next. Then we're going to find this gap fill, okay, at 2.31, and then we have that nice 50-day at 2.48. So when you match this up here with the seasonality chart, this is looking very, very bullish here to go higher. Your RSI, look at here, how much room you can run. Look at your MACD here, okay? You have a nice crossover. That tells me that's bullish, and the momentum is going to the upside versus where the green is below the red and the momentum is going to the downside. So on Monday, watch that key right there, 2.10 level. That is very, very critical on a closing basis here for next week. Okay, now we look at the weekly chart. Now, I was always pointing out this level right here. This is sitting at, look at the low, that's 1.967, okay? When it fell off here for the week, on a weekly, monthly basis, then that tells me then that this price is, you're out of the game kind of a situation. You have to get back up in it. Now we're back up into that level, which is very, very bullish, okay? So now what you want to do is you want to watch this key 8 simple moving average at 2.344, okay? So if we start breaking on up here, before we even get to the gap fill, we're going to have this here as a nice, good, resistant level at 2.34. Because you can see here where you popped up, you can see right there it popped up, it took to the following month here to get above it and to go higher, okay? So always watch that weekly. So when you're doing your charting, always take a look at your weekly and then your monthly every so often, so you can get more of a bigger picture. Now, when you look at your MACD, now your green is still below the red, but look how much it's trying to curl up there, okay? If you can get above that red here, plus you're way on the bottom here, but look at your graph. Your graph is going on up here already, which is very, very nice. RSI here, so you got so much room to run here. Very, very good. But always take a look here on a weekly and a monthly chart. Okay, now we're going to take a look here at a crude chart. Okay, crude oil right here. Now, one thing I also want to say to everybody out there, okay, when you're trading, okay, and I've been doing this for a long time, okay, I got interested in when I was in high school. I made my first trade, let's say, when I was I was a teenager, okay, and it was like my side hustle. And then I've been trading now full time. That's all I do, okay, for over 2 decades, okay. So you don't stick around for 2 decades here trading if you don't make any money. Okay, it's just as simple as that. So always remember that. But what I always learned is very, very easy. First thing, keep things simple. Don't complicate things with all this and all that. You notice what I do is I use simple moving averages. There's your 8 simple moving averages, your blue. Your 21-day is your yellow. Your green is your 50 SMA. You have your 100-day at the purple, and your red is 200 simple moving average. These blue lines here, these are price channels. I like the price channels. Now you can use clouds, you can use the Bollinger Bands. I always found that price channels are a lot more accurate because basically all they are is just the tops and the bottoms of the candles, okay? So they're all just like right here, okay? So that's what you always want to look for here, but keep things simple. And another thing you want to watch is don't trade what you want to trade. Oh, it shouldn't do this, or it should go there. No, it doesn't. You trade the charts, okay? You trade what's in front of you. Right now, this is in front of you, okay? It might not be what you want. It doesn't care what you want, okay? You have to trade what is in front of you, okay? So that is the key. Don't trade what you want to see or what you think it's going to do or that. I think that's going to do that. No, 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 no. That's totally wrong. You're going to lose every time on that trade, okay? You always want to look here like at chart patterns. So I've been pointing out right here, this is a head and shoulder. See this head? Okay, here's your left shoulder, here's your right shoulder, and where are we going? All the way on down, okay? Now, what we also want to look at is candlesticks. Now, when we look at here, you look at this candle, okay? You have a red candle. What do we have here? Lower high, lower low. What do we have here? Lower high, lower low. You never say, I'm going to take a long on these red candles. You wait for a reversal candle. See this? This is a reversal candle. It's a doji. It's a red dog. Whatever you want to call it, it's reversing the trend. That's what it does. And they all come in different looks. This looks like a cross. This doesn't. That's a reversal candle, okay? Look at this. See the difference? Okay? And every time you get one, what happens? It goes on up. Look at here. It goes right on up here until it runs up, and then it tells you the opposite. It tells you this trade is done. It's going down. Then you want to always look here at a situation. See this here? You had a high. We had another high. This is a perfect double top situation. It tells you you got to go short. This is not going to be a long position unless you close above that 87.67. That would negate the double top, but it just didn't. It's just like on natural gas. When you had the 2.056 and then you had 2.05, that's a lower high. A lot of times those will go back down, but in that case on Friday, it didn't. It went above, which tells you got to get long, stay long, and look for the next level, which was 2.09. Okay, once you broke through that, then you have that clear path going higher all the way up to that 2.16, and that's exactly where you want. Okay, so in this situation here, okay, when you see these simple moving averages, now we use these for support and resistance, but we also use the candles. You look at the high, the low, and the closing. But the simple moving averages are a lot stronger at the support and resistance, just like here. Okay, when you run up into a situation and you see this topping tail into that 21 SMA here, okay, you don't buy that. That's where you sell, okay, and you get out. Now, if you're not a short trader, then you just sell, get out, and wait for a buying opportunity. If you're a short trader, you get in and you short this. Look at this pattern right here, okay? It's a series of lower highs and lower lows. That's never good. Then we had an indecision candle here, and then what happened? It went all the way down here again, okay? So now if this level here is lost, then you're going to start fading all the way down here to all these different levels here until you find support. But what we're looking for on these candles here is a reversal candle, like this, like this, like this. Until you get it, this is going to keep going right on down. Now, when you look at your RSI here, okay, you can see here where you're almost into oversold conditions because now you're going down into that red line. Now, your MACD is not. Your green is below the red, and that tells you got momentum, but it's to the downside, okay? It's not like this green here, momentum there to the upside, okay? And then what you always want to do is you want to look in this RSI for divergences. Here's a perfect example of a divergence, okay? We have a low, have a really low. We have an even lower low, but we have a higher low. See this? Positive divergence. tells you you got to get in, get long. Okay. Then once you get above that 8 simple moving average, that's it. Once you start losing that, then that's you get out of the trade. It's just as simple as that. But what we're looking for here on this all these red candles is a bottoming tail situation that tells you that the selling now is done in crude oil, okay? And then we can take this thing higher. But another situation you always want to look at is when these simple moving averages cross below. It crossed below the 21-day, cross below the 50-day. That tells me this is going to go lower. You cross that 200-day, this is good night, Irene, okay? It's just that simple. It's just like what we had here, okay? So you look at this 8 simple moving average. Once you got below it, it just was fighting it the whole situation. Now it went above, okay? It got to the 21-day, but you couldn't close above it. And then she just kept on sinking all the way and down. Another thing is you want to look here on patterns is look for us like this. This is a perfect bear flag situation. We're going to look a little bit more at some chart patterns here later today. But this is a typical bear flag situation. You have a big ass red candle, and then it tries to work up and it puts in a lower high, okay, like we had here, and then look what happens all the way down until you get that reversal candle to shoot right back out here. So bottom line is this 8 SMA, the 21-day, the 50, the 100-day, and the 200-day, these are your key support levels, okay? And they're also your key resistant levels. When you see this running up and it goes into this, this is where you sell. Now, again, if it comes down here to this, like say this 50 SMA here, okay, this one held, the next day went lower, okay, but you put a bottoming tail situation in here. Okay, that tells you got to get long. But when this candle went into that 8 simple moving average right there, that means you got to sell your position. Same way with here, you see a red candle, you don't buy red candles, okay? You just don't do it. You want to buy the green. But when you have this red and it goes into it, you got to sell that. These are like brick walls when you go into it. The same way with support, it'll hold the situation, okay? But when you see this, now we're looking for that green candle. So this is not a buying opportunity until we see a reversal candle situation, okay? But again, keep things simple. Don't trade what you want. Trade what is in front of you. Right now, this is oil. This is in front of you. No matter what you want, no matter what you think, okay? So now, next what we're going to do is I'm going to put a video on here of this, of old Einstein. And I want you to listen to the video here. Now, if you're a beginner, this guy offers a class, okay? You can take this class and you can begin it. Now, just remember, a lot of times what I do is when I trade real fast. I'm in, I'm out, but I'm used to this. I've been trading over 2 decades here. This is like nothing to me, okay? Okay, that's just like eating and sleeping and working out. It's nothing. It's just part of my life here. So always remember that. Okay, now remember, on this site here, what I do is I provide you with support and resistance levels. I try to help out everybody I can, okay? But I'm not a teacher. I'm not a school, okay? So if you need a little bit of help, follow this Peter Tuchman guy. He's really, really good. He's got a trading course here that you can take. There's a lot of trading stuff here, but get it from a guy who's got really big experience. That way you know. But the things what I always try to show you is if you know where something is going, okay, then that's how you make the money. So I tried to show you that if you take a trade here, okay, and then you sell it into there, look how much money you could make just on here because you know that that's a brick wall and you're not getting through. Same way with here. Once you put in these series of candles here, you don't buy none of this. You always want to sell or short into these situations. Now, these are good scalping opportunities as you do daily, but don't hold it overnight when you see these red candles, okay? So what I try to do is give you all the support and resistance levels. I try to show you where, the crude oil or natural gas or whatever we're trading here, where it's going to go. And that is the key, is I'm trying to lay a roadmap for you. But if you're a beginner and you just don't get it, maybe you just need to take yourself a course there. And then you look at my chart and you say, oh, now I know what Irontrader is talking about. See, it will really help you. So I'm going to put this video on here. I just want you to watch it, okay? And it'll give you a lot of good insight. And then when that video is done, then we're going to start looking at some chart patterns, some candlesticks, and some chart patterns. Okay, here we go.
From David Green, and we've taught in Wall Street Global Trading Academy. If you want to know more and you want to really become a successful day trader, go to Wall Street Global Trading Academy, and that's all I got to say about that.
We're back at the New York Stock Exchange for another incredible interview with none other than the man, the myth, the legend, Mr. Peter Tuchman.
Boom! Chart Addicts, how you doing? Einstein and Wall Street from the balcony at the New York Stock Exchange. Welcome.
Education is the great equalizer between institutional and retail. But
Correct.
A lot of retail traders feel like no matter how much they learn, they still feel disadvantaged because they don't really understand how the institutional side works. Do you believe that traders have a fair chance if they have the right education?
Okay, if you learn the game and you understand how trading works, and you become a successful trader, you learn technical analysis, you learn price action, you learn about risk management, which means stop orders. The stock market gives you this amazing tool that can protect your downside risk. What does that mean? That means if I put 100 shares to buy at 50, I can put in what's called a stop order at 49.5, so that if the trade goes against me, I'm not going to lose. I can identify how much I'm willing to lose. And so think about it. I'm willing to lose $50 to make $200 every day of the week, but I'm not willing to risk 200 to make 50, because if I have 1 losing trades, I need 4 winners to get even. So the rules of the game need to be identified, need to be learned by everybody. When somebody is a successful trader, they're not worrying about what the institutions are doing. When someone is unsuccessful, they love to blame somebody. They blame the market maker. He sees my stop orders, that's why I don't use them. Right, he's out to get me, la la la. Trust me, the bigger players in the game are not out here to hurt retail investors. They're not out here, the market makers are not out here to screw the retail investor. They have no, look, I've gone up to them, I've been trading with them for years. David Green, my partner, was a market maker in Bank of America, some of the biggest stocks in the world for many years back in the 90s. At the end of the day, those people who you guys, the retail, and I say this is a broad, I throw out a broad blanket on that because I hear it all day long. I'm boots on the ground. I have a deep connection to retail traders on social media who will say to me, they're all out to get me, they screw me, those guys see my stop orders, they take the stock down to my stop order, they take me out, and then they run the stock up $5, la la la. You're always hearing when people don't learn the rules and don't get the playbook, and they are unsuccessful at trading, they will find someone to blame except themselves for that lack of education. Look, if you are hungry, I can give you a fish, or I can teach you how to fish. You'll never be hungry a day in your life. The best defense against the rug pull, right, which happens in all businesses, whether it's NFTs, whether it's equities or whatnot. In business, we've seen it with the Zach Morrises of the world on Twitter Space, guys who are out there pumping and dumping. Going back to Jordan Belfort, there are bad guys in the space. But if you learn the game and you get the playbook and you do your due diligence and you educate yourself on how to trade, what you do, anybody can hit a buy or a short button, but you need to understand what you do when you get into the trade. How do you execute? Look, executing a losing trade is the same as executing a winning trade as long as you do it correctly, right? So at the end of the day, don't blame people for your mistakes and lack of education. Don't think this is a get-rich-quick scheme. You will get out of this what you put into it. If you want to learn how to trade, Wall Street Global Trading Academy, David Green, my teacher, mentor, and friend, is one of the masters in the space. And it doesn't happen overnight. You will get out of it what you put into it, right? It takes probably 3 to 6 months to become a trader. You don't have to lose money learning how to trade. Whether you're trading futures, look, there's all kinds of great stuff going on within the funded futures trading market, right? There's a lot to learn with the Weebles and the Robinhoods and whatnot, how you enter a stop order, how you get in using Thinkorswim, interactive brokerage, whatever it is. There's a way to do this correctly. There's a way to educate yourself so that you are successful at it. Let's be clear, the numbers are that 8 out of 10 people who try day trading do not succeed. So the odds are against you. So you need, when you're in a situation, whether you're climbing Mount Everest or trading stocks, when the odds are against you, you need to identify the odds and do everything in your power to protect yourself on the downside.
So
know
the rules. Know the rules.
To answer your original question is, don't worry about the institutional guys. Look, I am an institutional guy. I trade for large institutions. I trade for hedge funds, okay? And I treat them the same way I trade retail traders. So they're not getting preferential treatment. Do they have access to more information than you guys? Very often, yes. Bloomberg costs $25,000 a month. no retail trader I know is going to pay for that. So they have access to information, they have access to research, they have access to a lot of different platforms that you guys don't have. But that doesn't mean they're at an advantage. They are, look, they're whales. They are different, right? They look, hopefully, if you do what we're going to try and help you learn how to do, and you become a trader and you want to do more and get a job as a portfolio manager or get a job at Morgan Stanley or Wells Fargo and go on to become someone in the industry as opposed to just being a day trader, okay, then you can play with those whales. But now look, envy is a really bad emotion. Jealousy is a bad emotion. Identification is the key emotion here. So don't worry about them, right? There are things that we have no control over. You are powerless over what the whales and the institutions are doing. Trust me, from Einstein to you, they're not out to get you. They have no bad things against retail traders. Focus on what you're doing. Focus on learning the game. Get the playbook. Get the menu. You can do it at Wall Street Global Trading Academy. You can do it with my friend over here with Roy. There are plenty of good people. Find a mentor. Find a coach. We do that. We have a course that's 16 hours, 21 videos, 200 hours of content, right? We do Fibonacci. We have master classes on options, swing trading, all that kind of stuff, watch lists and whatnot. We coach and mentor all our students every Thursday night live. We have a boot camp where for $6.99 you can get into David's private trading room and learn the course in real time. You buy the course, you study it for 3 weeks. We have a private guy who will help you set up all of your charts for you, teach you the technical analysis necessary, which is in our course. Then you spend a week in David's private trading room learning how to trade. That's what you need. This is not easy, but it's simple in a way that we tend to overcomplicate things. You need to learn the basic tools, the education that's necessary to become a trader. I'm all about hitting singles and doubles. If you're out there trying to hit home runs, you're liable to make a big mistake.
That's such a good one. Now, I want to help folks understand more about you and David's backstory. Like, how did you and David get introduced? What is your timeline with David? And what do you feel like are some of the biggest takeaways that you've gotten from him since you met him?
So, David Green and I started here on the floor of the stock exchange in 1985. I got my first job here. I was 27 years old. I got down here. I had done a lot of things. I got a degree in college in agriculture and in finance. I moved back to New York. I was trading commodities. I opened up a record store. I was the doorman at Studio 54. For those of you who have any memory of that, we can't talk about anything else about that period of time because I'll have to kill you. Anyway, what else did I do? I had a record store. I was trading commodities, and I was going to business school. I was going to Baruch to get an MBA because I thought that was what was necessary to get into finance. I never finished the MBA, though I did make a pretty good effort at it. I ended up getting myself in a bit of a jam. I left the country. I lived in Africa for 2 years doing the accounting for a Norwegian oil company. I came back to New York. My parents said I was 27, time to put your big boy pants on and get to work. I got a summer job as a teletypist here on the floor of the stock exchange. There's no training to be a broker here. There's no training. You can't study to get a job on the floor. You've got to start at the bottom, whether it was as a runner, a squad, a teletypist, a clerk. You have to start at the bottom, develop trust, learn the game, let people know who you are, and then you go up the rung. It used to take 13 to 15 years to become a broker because it was a job nobody left. It was a great job. Everyone was making money. We had a lot of fun down here. Back in the day. We still do. We still have a lot of fun. But anyway, so I started as a teletypist on May 28th, 1985. David Green started at the same time. There were 5 Green brothers. They all ended up starting as squads on the floor of the exchange, and all of them went on to become market makers. They're all now left the business in some way or another, but they spent many years here. David, who I met back in the day, ended up was a squad, a clerk, a market maker specialist in some of the most amazing stocks out there. He ended up retiring at the age of 38 after Goldman Sachs bought Spear Leeds for $4 billion, which was one of the market making firms. He left the street. He went out to trade on his own because as a market maker, you have all the orders in your hands, right? You know where all the bodies are buried. And it's a lot easier to trade than sitting at home, day trading in the dark. As many of you may know, it's a lonely job. If you don't know the rules, you're going to get your butt kicked. David went out and got his butt kicked. He lost $300,000 in the first 3 months of trading on his own after he retired at 38. He realized this was not a sustainable trading practice, that he would probably be broke in a couple of months, so he went out and started learning technical analysis. We've been friends over the last 35 years. He went out and did his thing. After he was able to get technical analysis and risk management down to a science. He opened up a private trading room and he's been teaching people for the last 15 years. I ended up keeping my career here. I went on to become a broker. I got lucky. I got my seat within 3 years of starting as a teletypist. I was good at what I did, but it was more a function of the fact one guy died, one guy retired, one guy quit. And I got thrown right up the rung really quickly. I got my seat on April 7, 1988, and I've been a broker ever since. So David and I have been friends for a long time. He's been my go-to because I don't necessarily use technical analysis. I built a trading model around what's called the market on close imbalances. It's a whole nother long story for a different interview that I use trading for the hedge funds that I work for. David Green has been active trading and teaching people for 15 plus years, deep into technical analysis, risk management, money management, and above all, the psychology of trading. So during COVID, we saw an opportunity when the 40 million people came in. We always speak to each other and we said, wow, think about it. 40 million new people coming into the market. They have no idea what they're doing. They suddenly have access to trading. Why don't we put together an academy and a course to teach them? So we spent about a year curating a course. The course is called Wall Street Global Trading Academy. It's actually a school. We have thousands of students all over the world. And it's 16 hours, 21 videos, 200 hours of. So we coach and mentor. That's our secret sauce. Nobody out there. You've got Online Trading Academy, 25 grand. You've got all these people out there charging lots of money. You take their course, so you never see them again. Our course is affordable, accessible, and fun. It's $499, $699. Every Thursday night, we coach and mentor all the students. They come on, they talk about the trade of the week, their successes, their failures, any questions related to the course. And every Q&A that we have on Thursdays is recorded. So the archives is literally 200 plus hours of every Q&A for the last 2.5 years.
Wow.
Questions asked by students and answered by us. So as you're going through the course, you have questions in your head, and the only stupid question is the one you don't ask. Remember that. So everything you may need to understand, you can go into the archives in the course and learn it. It's broken down and sorted by subject. Fibonacci, we got a masterclass on it. Swing trading, we've got a masterclass on it. Double top, double bottoms, trend trade, far from moving average trade. There's a whole masterclass on it. We have a 6-hour course on options in the archives, let alone our whole course. And then we coach and mentor, and we have a boot camp. David's put aside 1 week a month where anybody who wants it, it's called Tier 2, $699, totally affordable, comes with coaching and mentoring. And a boot camp is a full week in David's private trading room, trading the markets live and learning the course in detail, every single section of the course live with David Green in the course while trading the market live. So it's all out there.
Okay, that was Peter Tuchman, old Einstein. Now again, if you're a beginner or if you're just trying to start off, or you say you're kind of a novice but don't really have the skills, just try his trading course. This Wall Street Global Trading Academy might be something you're interested in. Okay, but again, when you watch the whole video, they use the same things that what I'm teaching you right here. Okay, candlesticks, patterns, head and shoulders. You know what I'm saying? Double tops, double bottoms, the same kind of a situation, but it might be more in depth, like a personal one-on-one situation, and you might like that. Now, another thing that he also stresses, and which I always do, is use a stop order. Okay, so what I've been doing here lately is I've been putting in like break-even stops. Okay, so now last week I had break-even stop. I got stopped out 7 times on my trade. I do a lot of trading though. Okay, I'm doing 20, 25 trades a day, easy. During this period here, while you can still do it. Now, a lot of times what you want to do is I'll cut those trades down, especially on Friday. I cut that way on down. But it all depends. Technology is really, really ripping, okay? So what I do is I'll trade a lot of technology stocks, plus with the TQQQ, and that sort of starts taking all the trades right on up. But usually crude oil, I like to keep that maybe to 3 to 5 trades, same way with natural gas. But then when you start adding up all the technology, it comes out 20, 25 trades a day. Now, last week I got stopped out with a break-even stop 7 times, okay? Now, you say, oh, break-even stop. I didn't gain nothing, but I didn't lose nothing either. So A lot of times I'll do that as a break-even stop, or at the most I'll put in like a 1% stock. So if you buy a stock for say $50, you put a stop in there at $49.50. Okay, if you get stopped out, you lose that 50 cents on the deal, and that's is done and it's over with. Okay, you move on to the next one. Now remember, losing money, okay, is all part of trading. That's all part of it, all part of the trading. Okay, so anybody tells you, oh, I've never lost any money and never done this, they're full of shit. Okay, just as simple as that. That's all part of it. The key is to minimize those losses and then to capitalize on the old gains. Just like what old Einstein said there, that he'll take a trade for like make $200 a day versus a $50 loss. Okay, not the reverse of that. Okay, so that is going to be the key. Is what you want to do. So always want to use the stops, either a break-even stop or like even a 1% below that stop, and then you get stopped out, you take out, and you move on. But whatever you don't do is never revenge trade. That's why, like on what I do, like on Fridays, is I cut my positions down in half. Okay, so I won't take that much unless it's rolling like natural gas did. Okay, then that's a whole different scenario. But what I did is I just cut down. I was using the short on the crude oil. Okay, I wasn't trading any long, but then I added it to that natural gas, where then I added to the position and I took it off at the end of the day once I had that money in your pocket. Okay, so always put money in your pocket every day. If you start on Monday, by the time you get to Friday, you're going to have a lot more money in your pocket than what you think. Okay, so let's go over some patterns here. Now, these are bullish patterns. That's what you always want to look for here in candlesticks. Okay, so you look at here, okay, you can see where you have a nice higher high and a higher low. This is pretty much what we had here on natural gas, okay? This is the same thing here where you have that series of higher lows. You don't want is where you have a series of lower highs and lower lows. That's always negative. Now your hammers, I always talk about this. See this bottoming tail situation? They come in all forms. That's the key. Now we have an inverted hammer. These are here you got to kind of watch, because what it does, it looks like it's the topping tail, but then the next day, if long as it closes above that key top of it, then she can rip up very, very high. You know what I'm saying? That's the key. Same way with here, you have just a bottoming tail going on up. Okay, so when we look here at these bull flags, this is a very, very key situation where you have that bull, coming on down. See that wedge coming down, and then she breaks right on up. See this right here? Okay, so you have the nice big pull, and then it zips right on down. Looks like it's going to sell off, but you hold the most of that candle, then she zips right on up here, okay? Same with the rising three. It's basically like a bull flag situation, and then zips right back on up here. Okay, falling wedges are always very good, because what they do is they look like you're going down, but once you start breaking that line, okay, that trend line, then she rips, and then she can blast all the way back up to the top here, okay? Same way with a bull pennant. Very, very nice. It's like a nice bull flag. When you break out of that pennant, okay, to the upside, you go up. But again, you also got to be watching that if you break down below that pennant, she can come down to flying down really, really nice. Same way, ascending triangles. These here, basically, when you have your pole going up, and then we have where you're just trading sideways, but look how tight. See how tight that gets? Tight they get, and then when she breaks out, then she just rips, okay? V-bottoms are always good, comes all the way down. This is what you kind of look for. You look for a bottoming tail, and then she can go right on up. Cup and handles are always very, very bullish, because we just basically have a nice cup here, and then what we do is you have a smaller handle. It can't go low as that. You just have that handle. Then when she breaks that neckline, she just rips, okay? Double bottom situation here. We always talk about this, okay? We hit a bottom, okay, and then we put in a higher low. That's always saying you got to get in. That's the same thing we had on natural gas, where you put a low, a higher low, a higher low. That tells you got to get in, and she is going to rip. Now, these triple top situations, these are a little bit tricky, because it rises on up here, and then it puts in like a series of lower highs. So it kind of fools you out. But again, once you break that trend line, that is the key. Then she rips right out higher. Now, if it doesn't, then she comes flying down real, real hard. Now, inverse head and shoulders pattern. This is basically what you have on oil, except right now it's just a head and shoulders pattern. This is inverse, where you have your left shoulder, your head, your right shoulder. When you see that, then she just blasts right on off. Okay, let's take a look here now at some chart patterns. Okay, here we just have some chart patterns here. Okay, all the ones here that are in red are bearish. All the ones in green are bullish. Okay, so obviously your head and shoulders where you come up. This is what you got going on in crude oil right now. When I point out that left shoulder, the head, the right shoulder, and then look what happens. It comes all the way on down. Okay, so this here is always a good pattern, because this here is basically the inverse of it. Okay, so you have a left shoulder, a head, your right shoulder, and then once you break out, she's gone that way here, okay? Double bottom, that's always my favorite because it rallies up, and then when you put a higher low, that's always a good tail to get long and just rip straight on up here. Now, this is the same thing in reverse, though. This is the double top, okay? Then what that is, and when you rally up, you come on down, and this is what I'll talk about in natural gas, that this could possibly happen. When it rallied up to 2.056, okay, and then went up to 2.05, that was a lower high, okay, and that could have came all the way on down. But you got to figure, once you break above that 2.056, then she rallied up very, very nicely. Triple bottom's always good because you have really a sideways action. You can make money in both directions going here, and then when she rips, she flies right on up here. Obviously, this is the opposite of what that is. Here's a falling wedge. It looks like it's falling on down, but once you break that resistant line, boom, she goes up very, very nice. This is always bearish. Anytime you see something rising like that and it starts tightening up, then you know once that's lost, she's going to come flying down. Okay, expanding wedge, these are always just the opposite of what that is. See how you have your big and then you have your small? This here, you start off small and then you start getting bigger and bigger. And then what that does, it gives you the momentum. When you break that trend line, boom, then there she's gone. Bearish is just the opposite because you have that wedge going on to the upside. This is bullish here. Nice sideways action all the way down. Obviously, you can see where this is bearish. It's just the same thing, but it's just on the way on down. Bull flags, always look for bull flags. Where it looks like a fake out, okay, going on up, and then when she breaks that trend line, makes that pennant, then she just rips. Now, bear flags, I showed you a really nice good bear flag on the crude oil. Very, very key, where it goes up here and it makes like 3 candles. And then if you can't get above that where that pole is, she comes flying down. Now, these are very good here too, because what they are is they're triangles, but what they do is they start to tighten up. And then once she breaks up here and comes down and holds that retest, then she's gone. Okay, just the opposite for the bearish one. This is also very good because you have that wedge pattern, but it gets real tight. Again, these can also fall to the downside like we have here. But again, when it rips at the upside, then it's good, okay? Because this is basically just sideways action. It's not like what we have here, a rising wedge, okay? You never want to see those unless you're bearish, okay? Now, same way with here is we have it starts off big and slow like that, and it doesn't break to the upside. It just does the opposite and all the way on down. Cup and handles, that's very, very good. See, there's your cup. Then you get your handle. Once you break out of that neckline right there, boom, she's done gone. And right here, just the opposite. You get the reverse couple handle, and then she shoots right on down to the downside. And that's just never, never good what you want to see, okay? So today we did a pretty good as far as some stock tips and some trading, okay? So just remember, trade what's in front of you. Do not trade what you want or what you think is going to happen. Or, hey, this happened last week, or it happened the week before. That doesn't mean anything, okay? Trade what's in front of you, okay? Just like on natural gas. As long as it held that 1.9 level, okay, and you broke above that 2.5, then you look to the next level, which was 2.9. Once you went above that, then you got to keep that trade long. Just keep raising your stop up. That's all you got to do. Another thing when it comes to stop, you can use break-even stops or like a 1% stop just below that, okay? So you get stopped out, so what? Okay, I lose a little bit here, but I'm not losing a lot, okay? Okay, if say let's say, so if you're trading 100 shares, I lose $50, so what? But you got a chance here to make $200. That's the key. And then as the trade keeps going up, just keep raising your stop up like I did on natural gas. I just kept raising the stop up. But don't ever think about, this is going to sell off because it's sold off before. It doesn't mean nothing, okay? Trade what is in front of you. Use stop losses. Look at chart patterns. Trade support and resistance, okay? So again, if you can't do that, you say, I just can't get the hang of what Iron Trader is talking about, then what you have to do is just take a course. Now, this guy here, that's just one course. It's Wall Street Global Trading Academy. I have no affiliation with that or anything like that, but I'm just saying, you could take a course. There's a lot of courses out there. This is a cheaper course. Trade it out there. If you want to start to learn and you want to make this your business, make this your life. Just remember, I've been trading full-time for over 2 decades here, okay? So a lot of times what I think that people should already know, they obviously just don't know, okay? So the key is making money every freaking day. By the time you get to Friday, you got a pile of cash there, but the key is to hold your cash. Keep your cash. Do not give it back at the end of the week. Okay, hope everybody's having a great weekend. And I'll see you here on Sunday night, and we're going to review crude oil and natural gas and get you set up for Monday. Thanks for watching.
Fly me to the moon, let me play among the stars, and let me see what spring is like on Jupiter and Mars. In other words, hold my hand